May profits be upon you. Welcome to another Weekly Forex Forecast. I'm in my squeaky chair and I am here with you. I'm glad you tuned in. Thank you for watching. We're looking at the US Dollar Index and we're looking at the monthly time frame. And where we see the obvious is that we've been in a pretty long time upward ascending channel, right? Look at this low here. Since that was done 2011. 2011 we made a higher high, and then we make a higher low here, and then we make a higher high there, and then we have the potential higher low again, which could lead potentially to another high. All right, and if you've been watching my videos, you know that I've been on that for months now. Okay, let's take a look here. Come on, man. Don't do that to me. Okay. You're driving me crazy here. I'm trying to look at, thank you. All right. So last month, this month is about to end tomorrow, right? Tomorrow begins the new month. Look how the candle is. Very indecisive. But what we can see is that here and here, we see a fair value gap, a bullish fair value gap that price could potentially open, tap into, and use to go higher. And these bullish fair value gaps also let you know that there is bullish order flow going on. Okay, so I tend to be more bullish, even though this is a bearish. It's a bearish position. Look, we made the higher high. We cracked the bullish the overall structure here in a bullish manner. So this is part of the pullback. This is complex, all right. But this is part of the pullback to this this impulse, all right. The impulsive move, and this is the correction. We're looking for the new impulse to begin, and it has to begin somewhere. And here we are, where this looks like it could go either way, but this is after several months of bearishness. So we got to bear that in mind. This is, and the market didn't continue higher from the previous monthly candle. Why? I don't know. All right. Does it mean that we're coming back into this consolidation? Look how long we were in this consolidation. Several months before price finally took off. Look at this one. How long? How many months was this? 1, 2, 3, 4, 5, 6. 6 months. 7 months if you count that last bearish candle, and then we finally started to get some traction. So we should be looking at this in the same manner. We should be looking at this. We might be on the precipice after 1, 2, 3, 4, 5, 6 or 7 months of this sideways price action here. We should be on the precipice of a breakout. All right. Might be bullish, might be bearish. We don't know yet. All right. But something to consider, right? Look at all these weeks. All right. And this definitely looks like price is trying to turn around. We made a low, lower high, lower low, lower high, lower low. And then we started to move higher, and we took out that high. Technically, we made a higher high here in the month, not the week, the beginning of November. All right, we made a higher high. We pulled back. Again, we made a new higher high 2 weeks ago. And then last week, we had a very bearish week. But we still haven't taken the low of the previous week. You understand? So even though we've taken about 90% of the range of this candle, all right, we opened here and pushed hard to the downside. We did not take that low. The next candle could see a push down and then maybe back up. We don't know. But what I want to point out in this is we did have a bullish fair value gap here, and price used it to push higher. We closed higher above these two down closed candles, and I was thinking that we should see some continuation. Price moved down and did not move back higher like I thought it would. But we are now revisiting this area where that push, that impulsive move originated, right here. All right. So what are we to think? What am I to think? All right. What we have here is, I should have pointed out on the monthly, I did actually, is this bullish fair value gap here. And like I said, the new month could open up, use it for higher prices. It very well could. All right. And on the weekly, we see that the bullish fair value gap was respected here. All right. Even though price is coming back to revisit it, it was respected there. Got it? If we go to the daily, now we're on the daily, what you can see is there's some obvious turbulence, right? What we have is a push higher, a pullback, a technical higher high made, and then another pullback. And in this one, with this pullback, you see there was a bullish fair value gap here. All right. I got it marked. The deal is it was get out of here. The deal is it was disrespected with this close. That's a bearish indication, right? And what happens is a lot of people will look at this. The ICT guys will say, this has inverted into a inverted fair value gap, and price is going to use this fair value gap for resistance now to push price lower. All right. And you can see that we had a bearish close as price pushed up into it. We had a bearish close. But what I also see is that we did not close past Thursday's low. Yes, we went past it. We swept that low, but price closed back within the range of this candle. That usually indicates more choppiness, more sideways action, more consolidation. All right. And there is more of a chance, in my opinion, that we trade towards this high than we are towards this low, because it rejected from here already. You understand? It's a close call. And this is a very indecisive couple of candles here. This is an overlapping one, though, isn't it? What they call not a inside bar, but an outside bar. All right. But what I'm looking for is this high. I'm looking for this high. And can I get down here? Yes. And this low. All right. If price trades below this low and closes below that low, that's what I mean by trade through. It's not just going to wick through and go back up. I'm looking for a close. I'm looking for a close here and a close here. If price closes up here, I'm looking for more continuation to the upside. If price closes through this low, then we're coming towards that low. That's it. This is the middle of this range. The deal is, because price broke that high and pulled back, I'm looking at that movement, that impulsive move up, corrective move down. I'm looking for that corrective, impulsive move up, correction down. I'm looking for this kind of reaction over here. I'm looking for a higher high, higher low, higher high, technical higher high, higher low, and then a new higher high. That's what I'm looking for. If this line gets closed above on a daily closing basis. All right. When I see price doesn't take out the low, doesn't take out the trade through and close below the low of the previous candle, usually it means consolidation, or price is going to be trading towards that current candle's high. So that's what I'm looking for. All right. Now I want to show you something on the 4-hour. What do we see here? All right. This is the inverted candle, the inverted fair value gap. I want you to see I forgot to show you this on the daily. Look, there is a bearish fair value gap right here. All right, price, put that fair value gap in and move down. This is a breakaway gap because price spent 2 days down here. Look at these two candles. Spent 2 days down here and didn't reach back up for that candle. That's a breakaway gap. So we didn't expect it to go up there. If it goes back up here now, after 2 days, I don't think it'll hold. All right. I just want to point that out to you. I don't think it'll hold. I think price will blow through it. It might react to it, but I believe it'll blow through it. Now, this this candlestick is the one that I told you I'm looking at here. I'm looking at here. There is a bearish fair value gap here, but this was created on a Friday at the end of the month. All right. I don't give it a whole lot of, credibility. I don't think price is going to go here and then jump down there. I'm pointing out that on the higher time frames, the bullish fair value gap was respected and brought prices higher to these technical highs. Got it? And we haven't had a test of the breakaway gap here, and we haven't had a test of this gap here. Look at that. Look at this on the 4 hour. And if you see price reacting and then pulling back and then taking over that high, we're going higher. And this will be my next target. I'm going to mark that target here. All right. And that would be at 139. All right. Call it 140. All right. If we get a close above this high, if we get a close below that low, then we're coming down here. And I'm going to mark this because there's some relative equal lows there. Come on, man. All right. Oh, shoot. Why won't you get off? I don't understand. Oh, there you go. All right. So that's at 98.99. Call it 99. All right. And right below that is that you see how it's aligned. If you can see it, this here, I'll draw it out for you. This here is the line that this low is the top of the monthly fair value gap. If we get down to that monthly fair value gap, then I'll be looking for price to give us the signature that says price is going to go higher from it. All right, just so you know that. So just so that you keep that in mind. So this high, this low, this fair value gap, very important. All right. If you keep it to the daily, just look for a close above or below Friday's high or low. All right. We need closes, folks, on a daily closing basis. This will okay taking longs in the dollar. This will okay taking short-term low sells. Okay. You want to short it short term. All right. Because it's going into the monthly fair value gap down here. Okay. I hope you get it. If you have any questions, make sure you leave it in the comment section. Make sure you leave a like or a boost so that I can be encouraged to put out more material. I got a bunch of videos to put out today. I'm going to be covering the US dollar index, the Euro USD, the Pound USD, Aussie Dollar USD, NZD USD, USD CAD, USD Swiss, USD JPY. I'm going to definitely be covering those are maybes down here, but I'll definitely be covering the indices, gold and silver. All right. I will see you in the next video. Thank you for watching.